Hi guys, welcome to Sylvia Barrock with sylviabarrock.com. In today's video, I would like to talk with you about growth stocks versus value stocks. Which is better? Stay tuned. Now before we start guys, make sure you subscribe for my free Discord chat. It is free like I mentioned, and we share there every day swing trading, day trading ideas, and it is very useful if you want to connect and trade with other traders. Now I'm getting a lot of questions why I prefer growth stocks and not value stocks. And I also want to explain which strategy is better for which market. So there is no such thing as growth stocks are better than value stocks or value stocks are better than growth stocks. They all have advantages and disadvantages, and in a different market conditions it might be useful to buy growth stocks better than value stocks. Now here are some reasons why I'm looking at growth stocks. Growth stocks have huge momentum. They can run 200, 300, even 1000% only in a couple of years. So this is something what makes me interested in those stocks. They tend to outperform the market, and I want to be part of that. I want to catch that momentum to the upside and be part of those stocks. Value stocks are exactly opposite. Those stocks are slow. Those are established companies. They don't move very fast and they are more stable. So growth stocks, for example, are very good in markets which are bull markets. For example, we had in the past years only bull markets, and those growth stocks tend to outperform the markets. They make huge moves like I already mentioned, and if you want to outperform the market and be able to catch those kind of moves, definitely it is the right idea to focus on growth stocks. Value stocks are better in bear markets. Bear markets are, like we know, dangerous, and they tend to go down slowly. Sometimes we have panic selling and stuff like that. In bear markets, value stocks are stable. They continue to go higher slowly, and they are not that volatile. If we have bear market, those growth stocks are dangerous. They can go in both directions. Like I mentioned, in bull markets, they tend to go hundreds of percent to the upside. They tend to outperform the market, but unfortunately, in bear markets, they're going down very fast, and you can lose, of course, a lot of money if you don't have proper risk management and good strategy how to control this risk with those volatile stocks. Now, I personally look at the profitability of the company, and I also look that the company has increasing earnings per share and sales over the past quarters, years, and so on. I'm also looking that the stock is being bought by a lot of institutions over the past quarters. That makes me feel better and makes me think that the stock might continue to go higher. Now, when it comes to valuation, I have here an example of TTD. I have traded this stock a lot in the past, and I want to share with you why this growth stock has bad valuation. Most of the growth stocks are unfortunately overvalued. So growth and value, they just don't match with each other. If we have huge growth, normally that stock will be overvalued. And the reason is because, like I mentioned, those stocks tend to make huge moves to the upside. More and more investors are getting interested into those stocks. They're buying those stocks, and the price goes very fast to the upside, which makes them, of course, on the long run overvalued. If I scroll a little bit further, we see here the growth of the company. For example, earnings per share grown by impressive 101% over the past year and 50% over the past 5 years. So this is a huge growth, like I mentioned, and that's why those stocks tend to move very fast to the upside. I found here something very interesting for you on this Investingopedia website, and I want to share that with you, which explains it as well very nicely. As we can see here, growth stocks are those companies that are considered to have the potential to outperform the overall market over time because of their future potential. So most of the time also they have something new, hot sector, new product, something is very hot around those stocks which make them go even higher. Value stocks are classified as companies that are currently trading below what they are really worth and will thus provide us a superior return. So value stocks are stocks which are more stable stocks, stocks like Coca-Cola, McDonald's, which don't tend to move a lot. And like I mentioned, in bull markets, I want to take the most out of it. I want to be able to outperform the markets, and I want to be able to catch those huge moves. While this will be not possible with those value stocks, they tend to go more sideways. They are not able to make 100, 200, 300% moves in the next months or years. Of course, I'm aware that growth stocks most of the time are overvalued, but like I mentioned, I'm trying as a swing trader to catch the biggest move here and not to hold them like an investment over the long run. Of course, sometimes we also find growth stocks with good value, and I want to give you an example here. This stock which I've been watching recently is called Lake. Lake has nice profitability, as we can see here, very nice valuation here. Price earnings ratio is 9.88, which indicates very decent valuation of Lake, and it has overall, it's compared to the overall peers, not that expensive. So normally, if you're looking for growth stocks, you will rarely find something like that. Most of the time, like I mentioned, they're extremely overvalued. And if I go further down, we see here the growth of the company. Lake shows a strong growth in earnings per share in the last year, 1,157%. So this is of course huge and impressive, and that's what I'm saying. You rarely find stuff like that which has huge growth and also some good valuation. We see also here that this stock has been performing well. Earnings per share has been growing by 26% over the past 5 years, which is of course very nice as well, and it is not only based on the past quarters. Also, as we can see here, the earnings per share is expected to grow by 102.21% on average over the next years. So the expectation that this stock is going to grow is very high, and like I mentioned, it is still not overvalued, which makes me think that this stock might continue to go higher. But of course, I just wanted to share with you in this particular case an example that it is possible to find growth stocks with some good value, but most of the time, the stocks which make a couple of 100% of moves in a couple of months or years, they are overvalued. They have high price to earnings ratio, and you should be aware of that. And also you should be aware that any pullback might take the stock very fast down as well. So that's it for now, guys. I hope you learned something new from this video. If you like it, please give me a like for this video, and I will be happy to see you in my chat room, of course. Thanks for watching and for subscribing. Bye bye.